This is Marek Fuchs here today to talk to you about what happened with healthcare stocks and the stock market at large last week, and more importantly, try to puzzle out what might be happening in the coming week. Now, last week obviously was an abnormally truncated week as Hurricane Sandy closed the market for a couple of days and caused gas shortages and all other manner of destruction and distraction. So this week will be a return to normalcy, right? Well, you jest. Obviously, we have a razor-thin election to settle, hopefully this week, and the market will be either in a sort of moody form, as it has been. Well, it was really weak on Friday despite slightly better than expected job numbers, or it might just exist in a state of suspended animation until the election is settled or we find out what the winner will want to do, especially in the case of Romney. The point is, it's really hard to handicap a close election, at least as far as it affects the stock market. And here's what you need to do. Whatever you've been doing beforehand, well, proceed as you are. Keep doing it. Don't make any special allowances on hunches of where the market might go in the event of one winner or another. I mean, how can you answer whether the market is enamored of the way Obama and the Fed are sinking enough liquidity into the economy to raise the Titanic at God knows what cost later on in terms of inflation or the like, and who knows what vague, woolly direction Romney will take the nation in, especially in terms of healthcare. That's why if he wins, one of the things you really need to do is to lean in real close and listen to the first words he says about healthcare, because that will carry with it signals that the market will react to, at least in the short or midterm. Much more on that, presumably, next week, if Romney wins and actually speaks. Anyhow, last week also we had Pfizer, which reported worse than expected results and even lower than expected Lipitor sales. They also, well, they narrowed their frame of estimates going forward. But the real thing you need to know about Pfizer going forward is kind of twofold. Number one, as we've spoken about before, they have a really good drug cupboard. That's a good thing. Now, one thing to watch out for is if the market gets a little too merry and starts breaking out the flowers and chocolate about this recently announced stock buyback, announced last week. Pfizer announced that they're going to buy back more than $10 billion worth of stock. Now, this comes on top of the $4 billion plus that they still haven't bought back from the last time they announced it, and this brings up the point, which is this. Hey, look, companies are always announcing buybacks, but they don't always buy back as much as they say they will, or in the time frame that they promise. So here's what you need to do. Number one, realize all this stock might not be bought back. So the public outstanding float might not shrink, the earnings might not rise. Moreover, well, look, cash could probably be used for better things at this point. In terms of Pfizer, like research and drug development, though that cover is, to be certain, strong. And that's something to look for, too. Elsewhere, in terms of earnings, Vertex plunged on poor earnings, hepatitis C trouble, and what the market taketh away, it giveth in the form of Dendrion. As we spoke about last week, the earnings were going to come in really well, and they certainly did. But did I say giveth? Because this was a week that, at least in terms of healthcare, the market tooketh away, and it tooketh away a lot. Merck had troubles with their cholesterol drug. Johnson & Johnson and Pfizer pulled their halted development of their Alzheimer's drug, and Bristol Myers did something similar with their hepatitis B. Which brings us to this coming week and Amgen and their conference with analysts. Now, it was a big week for Amgen, obviously, in that they halted phase 3 trials of their pancreatic cancer drug. This is really disappointing and needs to be set against the recently good earnings a couple weeks back, in which Amazon also upped numbers going forward. So analysts will have a lot to sift through, and we'll be talking a lot about Amgen and what they said and what traders in the media might have missed next week, because there's the bone building drug, there's the anti-anemia drug, there's the good earnings, and then there are these pancreatic troubles. Wednesday, it's not medicine, but it's cyclical. Alcoa is going to talk to analysts. And all ears will be bent toward Alcoa because as they go, so tends to go the industrial side of the economy. So we're going to see what they say about the global economy. Speaking of the global economy, the global consumer economy will be what a lot of people will be flapping their lips about on Thursday as Disney reports, especially because one of the few economic statistics we'll get on this week is consumer confidence, which will come in on Friday. Now, last month's were good. But there's a caveat and something I want you to look for. Beware and be aware the fact that consumer debt is creeping up. Now the media and some traders are framing this as a good thing. In other words, consumers are confident. They're larding on debt again. But in reality, if consumer confidence is just driven by the same old stated delusion, in other words, Americans are borrowing hand over fist, that's not necessarily good, and it's certainly not sustainable. So look out for that. We'll talk about that too next week. In any case, if you disagree with me on any of this, and you surely won't, but if you happen to, my Twitter handle is right below this video. Feel free to tweet me any questions. Most of all, have a happy, healthy, and profitable week.